What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is June 23rd of 2019. Well, folks, I hope you are having a fantastic Sunday wherever you are, and in today's video, we've got to talk about the topic of the hour, and that is Bitcoin's continued parabolic price action as we've broken through the big even level of 10,000. So many said it couldn't happen. So many people were short on the market. If we take a look at the data, and we have seen a continued rally through upwards towards the $11,000 range. Now, the Bitcoin has cooled down a little bit over the last few hours. We're not going to be taking a look at the short-term price range and take a look at what target we're looking for next, as well as what technical indicators we're keeping an eye on in the sense of price and certain levels. But outside of that, we're going to be taking a look at the long-term macro perspective. What can we see Bitcoin go into throughout this next super cycle? What altcoin have I recently gone into for a long position? I'm going to be talking about that and why I got into that, both fundamentally and technically. And then we'll also take a look at a wide range of news. So we've got lots to discuss. Let's not push it off any longer and dive right into the update. So, taking a look at the last 24 hours, we've finally seen Bitcoin cooling down a little under 4% here, and this simple 4% decline has actually led a lot of altcoins to going up. Now again, as we've talked about, we know that when Bitcoin rallies quite high, there's a very good chance in some cases that some of that liquidity will exit out into altcoins, especially when they've been bleeding comparative to Bitcoin. And it doesn't take too much liquidity to prop up some of these coins, guys. I mean, for example, you can see Grin, Verge, a lot of the momentum plays, Raven coins, Nulls. We have as well down here Holochain, Chainlink, a lot of the movers in the market starting to come up, as well as Digibyte, Zilliqa, some of the protocols, VeChain, Komodo. Again, a lot of familiar names starting to get some rebounds. Now, I wouldn't consider this the altcoin cycle, guys. This isn't, I think it's become a meme at this point. I think a lot of people get very eager to see this kind of stuff. I think more than anything, it's a recovery on some of the bleeding, and people are picking up some of these coins because we are starting to get to a phase here where we can see speculation in altcoins. We're back at a range where we were back in, October and November. I mean, this is the range where people start to have enough liquidity to start getting some of these altcoins back up to certain levels. That being realized, I don't think we're going to see the vast majority, 90 to 95% of altcoins that we know, even in the top, 500, that are going to be making it, guys. I think it's going to be concentrating towards a very select few players where there's liquidity, where there's real development, and we'll talk about one of those players that I recently went long on that I really think is going to do a good job over the next few weeks and months. Now we can see since the last 2 days where Bitcoin has broken past 10,000, we have added $25 billion of market cap past $300 billion, very big even level for market cap. And we also have market dominance here, curling a little bit lower here for Bitcoin, below 60%. It's actually around 58% here for this top, and it looks like other coins might have a chance to start picking up, and some of the major market leaders as well, as liquidity might flow out. Now, as we go to take a look here at the chart, let's talk about the short-term range. So what's my next target for Bitcoin, and what am I looking to see happen in order to get there? It's actually quite simple. I'm not trying to overcomplicate things, guys, and I don't think we really need to. Again, I'm a naked trader in a lot of cases. I'm wearing clothes now, but I'm naked trading in the sense that I'm not using any crazy indicators. As long as liquidity is holding well, as long as the price is holding up good, that's what I care about, okay? And I'm not going to go bearish until we break some serious levels here. Now, what are those levels? Well, the next target range that I have here for Bitcoin is 12,000, anywhere from around 11,600 to 12,000 in this case. This is where we topped out 3 times back here, and actually before we continued the parabolic cycle up towards 20,000 in a very short period of time back here in 2017. So as Bitcoin now is testing near that level, what I want to see, and as we've started to get a correction, I want to see this come down and make support on previous resistance. The good news about this is that this doesn't mean we're having a serious correction here just yet before 12K. It really means we just have to come down towards 10,400, somewhere around that ballpark, the low 10,000 range, and basically form a bull flag here over the next 2 or 3 days, where basically price just pushes sideways. We don't have too much volume coming in, as we still see here. We don't have a lot of sell side volume coming in, nothing close to what we got on the buy side the other day of almost 40K Bitcoin on GDAX. So we want to see that push sideways, curl up, and then push up towards 12,000. And if we get a break above there, we might continue further, guys. I think at that point, you're really going to get mass speculation, and this might really push up towards 20,000. I know that would be quite wild if we got that, but I'm not at the fundamental point where I see that happening just yet. And again, we're on the logarithmic chart, so again, just to put that in perspective, we're still a decent ways away from that. Now, that being realized, this is just the short-term target. Well, what's the long-term target? Well, if we take a look at the long-term target, guys, here, this is a chart here that I took, and again, I want to reference back to a lot. The long-term chart here that I have shows the logarithmic trend for Bitcoin through Bitstamp, one of the longest price histories we have for Bitcoin, back going to the fall of 2011. And we can see here that Bitcoin moves in these super cycles. It moves in very long 4-year periods in the sense of its price. And we can see here that we've obviously set in, I think, the bottom at this point, guys. I think there's some people who are like, I'm not buying Bitcoin until 2 or 1,000. Guys, I really don't think we're going to see that. The reason I say that, just for any bears who are pessimists out there on the current price, miners will scoop it up. The hash rate is so high right now. The expense behind mining Bitcoin makes it to where they'd just be simpler and better off buying it off of exchanges. You've got institutions on the sidelines, way more buy-side volume as we can see reflected in price. And you've got a lot of global instability right now, which sets the tone for Bitcoin to do well. Now, do I believe we could get a correction before we continue higher? Yeah, absolutely. There could be a correction in the cards very soon. But as we take a look at the macro perspective here, we can actually take a look at the returns that we've had in the past. Now, I don't have it marked on the chart here, but I can give you a brief overview here. For example, down at this level for Bitcoin here, this is when price was around $2 to $2.50, and we peaked out here at around 1,100. Now, if we take that into account, that's basically, in this case, if we're roughing it off to around $2 per Bitcoin down at the lows, up towards around 1,100, we'll round that off to 1,000. It's a 500x, right? Huge move for Bitcoin. Then after that, at a low range of around 150 to 200, if we give or take around 200 to 20,000, that's 100x. So we're having a 5-fold increase more than what we had in this cycle over here in the first cycle. And then we moved on to having, so we went from 500x to 100x. And I think this time around, what would be very understandable to have here, if we were to be very, conservative compared to some of the crazy estimates out there, is the same target range that I brought up in the past, and I thought we'd hit much sooner as we were holding at the 6K level, which is 60,000, which is going to be a 20x here from the lows. I think that that's a very conservative estimate, and I think it's very doable here for this super cycle. Now, if there's other macro factors that come into play, if we have a Bitcoin ETF coming up, that might push us towards higher levels, towards 80 to 100,000 per Bitcoin. But I think at the moment, this is a target range to look for. It's at a decent time frame in the sense of what we've seen historically for Bitcoin. It'd actually be a quicker top than we've seen in the previous cycles. And in this case, 20x off of the lows is really not that much. We're basically calling for 3x off of the highs, which previously we had a 20x off of the previous highs here at around 1,100. So again, not that much we're asking for here. I at least think we could get up to this range here sometime in 2021 and possibly in the late phase of 2020. But that's if Bitcoin's price continues to move as it has and we don't get any corrections, which I think we're going to have to see eventually here, guys, as liquidity starts to slow. Now, as we've talked about the short term and the long term of Bitcoin here, again, we'll continue to talk about this. We'll continue to do some more in-depth videos. The name of the game here, guys, is that any time in this cycle you get a 30 to 40% correction, all right? That's the time where you can get a little bit more bullish. That's where I'm starting to add on my positions. I'm playing it simple. I've showed you guys. I did a video, and I really recommend you check it out. You can find it in my videos. I'll possibly leave a link down below in the description. It's called How to Simplify Bitcoin Investing. And I think I have it as my major video on my channel that we'll show and then display in that case, but I'm not 100% certain. I recommend you all watch that video though. Now, let's go ahead and take a look at Binance here, and I want to spend some time to talk about the altcoin that I'm currently long at. It's one of my largest altcoin positions at the moment, and that is Basic Attention Token, or BAT. Now, you all probably know about the Brave browser. I've got it up here. I'm currently using it at the moment. It looks exactly like Chrome because it uses Chromium, which is the actual open source technology for the Chrome browser. And I was a really early kind of adopter and tester of Brave and the Brave browser and the Basic Attention Token as it came out because I was really excited in the concept. However, it came a long way because there was still much needed improvements back in the day. And Basic Attention Token as well as Brave have really outdone themselves. Not only in market performance, we've seen that it's held quite well to Bitcoin over the last few months during this bear market, but along with that as well, the BAT token has such interesting factors to it that make it perfect in the sense of a utility token. It satisfies all the people it's trying to work with. It's trying to satisfy content creators like myself in providing an income, source of income for producing their content. It satisfies the advertisers in this case for demand in the sense of needing to buy the token for advertisements on the Brave browser, and also it satisfies the user by providing them income for their attention. So it's a very, very interesting trifecta of incentives for every single player. And we've talked about this, the chain of incentives. I've seen it in very few projects, and it's why I think Brave has done so well, why there's actual demand for the token outside of just pure speculation. Now, as we can see here on the USD chart, I love the technicals. We've been wedging in here. Looks like we're bound to have a breakout sometime in July, which I'm watching for. And if we take a look at the Bitcoin chart as well as we hop over, we finally got down to a target range I was watching about. I talked about it in my recent newsletter, and this was the range I was looking for, somewhere around 3,000 Satoshis. I was real upset. I had a buy order that would have picked some up. There was a big flash sale here. Someone had sold a lot of BAT, and it would have picked up some down here and would already put me in a very nice profit. But nonetheless, I still think I'm buying in at a very nice range here. It's declined from 9,400 Satoshis. So I think this is a decent discount range here for BAT, in my personal opinion. Again, you guys have to assess it for yourselves. But I recommend, if you haven't already, guys, definitely check out the Brave browser. I've got a referral link down below if you guys want to support. I'm actually going to be doing a video on how to set up the Brave browser. It's very simple, and you can set up all the same extensions, things of that sort. But I think it's one of the most interesting projects in the space. It's actually built something that's usable and has an interesting token model. So just wanted to put that out there. Now, one thing I forgot to mention as well as a topic of discussion that a lot of people have been bringing up. I saw on Twitter a lot of charts. I sadly didn't grab any of the new ones, but this was the old one. It's been circulating around in newer versions, and a lot of people have been comparing this chart for the discussion of a Bitcoin ETF in this next super cycle. And they basically took the old chart here. This is when we were back above the 6K range and didn't break below to 3K. People have basically compared this chart of gold after its post ETF announcement and release, and then how gold continued to act prior. 300% growth from the previous highs in 1980. Now, there's a few things I want to talk about in this chart. First off, this is not relative in the sense of time frame, meaning that, as you can see here, we did not have Bitcoin here in 1980 going up towards the same price range at the gold peak of 2011. This is a monthly chart here that is squeezed, it's compressed in order to match very similar to the Bitcoin trend. Now, the point I see them making here is, obviously, I think we understand technology as well as markets accelerate at a much faster rate than they used to. Let's be fair. That's a very important point to take into account. But I think the major point here is that there is a very similar trend in Bitcoin in this case. A very similar correction. I think it was around a 78 to 80% correction from gold at its top to its bottom. Very nice similar correction to Bitcoin. And as an ETF gets introduced, this will lead us towards parabolic new highs, guys. Again, we'll have to see here if it actually happens. But there was some interesting correlations with the bottom in the sense of how gold moved in this case. We actually had the same bump up in Bitcoin here, close above that level, and started to really enter into exponential price action. So I think that's where people are making the comparison. So again, I think in 2020, 2021, we are going to see a phenomenal rally, guys. I just don't know if I want to make this comparison just yet because it's a much longer term time frame, right? All right, so we've talked a lot about crypto. We talked about the long term, the short term. I want to go ahead and talk a little bit about traditional markets here. So an article came out of Bloomberg today saying it's too late to be bullish. Record stock run is drawing worries. Now, this is basically an opinion piece from a variety of managers of capital that they discussed in the article, basically mentioning how the S&P 500 is up 18%, setting all new highs in regards to the last few days, ever since we've had Fed Chairman Powell, as well as many other individuals from the Federal Reserve, Fed governors across the United States, hint at multiple Fed rate cuts this year. Now, as we've talked about, guys, you do not want to bet against the Fed. I actually have a slight disagreement with this piece. In this piece, their fundamental, discussion here is absolutely on point. The fundamentals are not strong at the moment. There is weakness in the underlying economy globally. You can take a look. There's some areas where there's some strength, but the reality is, guys, we are seeing a lot of cracks in the seams right now as rates start to rise up. We're starting to see that most banks are begging for a position where they can enter into quantitative easing. And whether that be through cutting interest rates or injecting capital into the economy, buying up financial assets, they need to go through those steps right now. And the Fed is showing that. It completely flipped on a dime. Now, the reason why I disagree with this article on being too late to be bullish is I think we're going to NASDAQ 10,000. The Fed's going to use its last two weapons. It's going to dry itself clean. It's going to basically buy up U.S. equities, in this case, to prop up markets, to satisfy investors. As capital dries up, they're also going to cut interest rates to increase liquidity in the market. And I think these two things are going to be enough to push us up another 20-25% on the NASDAQ to go up towards 10,000. Trust me. I'm as worried as much as the next guy about the fundamentals. But as the Fed has shown us, you do not bet against the buy the dip mentality. When there is the Fed continuing to prop up markets, people are very, very much going to be going long in the market. It's silly to bet against that. Now, we do have to talk about the bigger picture, though. As much as I think in the short term we are going to go to these levels, we have to talk about the cocktail of a disaster that's getting built up here. As the Fed has decided to provide relief to markets and has not allowed equities to continue correcting, let's take a look at the big unforeseen consequence that the Fed has built up by causing such a big bubble, the longest economic expansion in history, that they want to continue expanding. And that is the huge margin exposure that we have, the huge amount of margin debt that has come in to stack behind this rally. Now, we've not only talked about corporate debt, which has been at, again, historic levels, and in comparison to GDP is at higher levels than what we saw in 2006 and 2007 before the recession in 2008. Take a look at this chart here, guys. So we have positive credit balance and negative credit balance. So in this case, if you got a negative credit balance, this means that you're borrowing more exposure in this case as investors. So we can see the credit balance is calculated as the sum of free credit cash accounts and credit balances and margin accounts minus margin debt. So in this case, if we have, a very large amount of red in the chart, if we're starting to expand towards higher levels here, we can see that we're talking about hundreds of billions of dollars in overexposure and margin being borrowed to take a larger position than the actual underlying cash that the investors have. So you guys know about margin trading. It's the same exact thing in traditional markets as it is in crypto. If I'm, doing a 2x margin or 3x margin, I can basically have 2 or 3 times the position I have. But that also means that I'm much more susceptible to losing all of my money, because if it goes down 50% on 2 times margin, I have to get liquidated. They have to take away my position to cover in that case. And the same goes if I go for a 5x margin, is 20%, 10% or 10 times margin, 10% decline, and I lose everything. So the more and more risk people take here, and the more and more borrowed capital people are on, makes this more fragile. And you can see here, take a look at the wonkiness and prices we get up here, because that margin exposure has gotten bigger and bigger towards record highs here over the last few months. And as we press towards higher levels, it gets harder and harder for markets to push higher, and this margin is continuing to get higher and higher and higher to sustain that rally. If you start to get liquidations here, this leads people to have to cover. It leads people to have to sell vast bulks of shares in order to cover in that case, and to basically no longer have any cash in order to continue supplying the buy side activity, because they lose their actual underlying position. They lose their underlying cash. And this is exactly why you see here a lot of people get forced out of closing positions and start to enter into cash positive areas, in this case where the credit balance turns positive, when we start to go into recessions, right? I know it seems kind of counterintuitive, but it's when the liquidity is exiting out, right? That's when you have a positive credit balance in this case, when you're not taking on debt and margin, right? Because you can't do that when the prices are going down. You can do that when the prices are going up. So again, very, very big problem. No one's talking about it. You've got corporate debt exposure. You've got debt of pretty much any kind, obviously at historic levels. That's just standard in the debt-based system. In order for an economy to expand at this point, you need increased credit. You need increased debt. It's just the system that we live in now. And again, it's a very messed up system. Now, let's talk about what's going to save markets. Fed monetary policy. The Federal Reserve has obviously talked about cutting rates, but it hasn't talked much about what it's going to do after it cuts rates. When markets are not satisfied enough, when we have not reached NASDAQ 10,000, what's the next step that the Fed's going to do? Well, it's going to be to do with its balance sheet. It's going to start buying up financial assets. I have a serious feeling on this, guys. Again, I can't predict the future. We don't know what the Fed's going to do. The Fed's very mysterious. Jay Powell, mysterious man of the hour. He is, he's taken a very interesting approach to being the Fed chairman. I have to say, out of most Fed chairmen, I actually kind of admire Jay Powell. He's been dealt with a really interesting situation, taking a more neutral stance on the reality that we do have central banks in this world. Jay has been much more, I think, reputable comparative to Janet Yellen, who literally used to cater to everyone in the market. He's done it once now in the sense of what we just saw recently, but I'm interested to see if he's actually going to be able to balance this situation and hold it off. The thing is, at the end of the day, Jay Powell has kept one thing consistent. This is where I give him credit. It's been the Fed balance sheet. He has kept it on autopilot as promised, and we have been declining and increasing at a steady rate as we started to enter in towards the later phases. It's going to be a reduction of, I think it's $15 billion per month to $30 billion in assets every single month. Basically, U.S. Treasuries being dumped on the market, as well as the toxic mortgage-backed securities. And we can see that the Fed has been leading the charge here. Other central banks, Bank of Japan's going off the chart here. And we can see other banks as well. People's Bank of China, ECB have started to cut as well, but not at the rate of the United States. Just simply not. They haven't been able, on the sense of a percentage basis, the U.S. has been much more consistent about it. Now, what are they going to do now? Well, they're going to start packing up assets. I really do believe you're going to see that in the next few months to a year, guys. You're going to see the Federal Reserve into 2020 talking about potentially picking up U.S. assets. And this is going to help us push up towards that level. Now, as we take a look here, the Fed has been on pace so far. It's been on its tapering plan. It's basically trying to hopefully go down towards levels we saw, pre-QE, the finalization of QE1. We'll see if they can do that, but I don't think that's going to happen going into 2022 and 2023. It's just going to be too sharp. It's going to be too hectic on markets. You're talking about, in total, we've already bared some of this, but you're talking about a reduction of $2 trillion in the Fed's balance sheet. That's $2 trillion of sell-side activity into treasuries, into, again, toxic assets in this case that the Fed took off that no one really wants to buy. And this is going to remove liquidity. If people are buying those assets off the open market, it doesn't really matter for what price. It's $2 trillion worth of value at the end of the day. If they're getting rid of $2 trillion of assets, that's $2 trillion of buy-side cash that's not going into stocks, that's not going into properties, it's not going into the broader asset market. And even though the U.S. has gotten a boost of cash due to the new tax law that we've seen, and interest rates are still relatively low, so credit can still get injected into the economy, you're going to need something to bolster the economy. And I really think that in order to keep that up, they're going to have to stop the autopilot. They're at least going to have to freeze it. If not, they're going to go through and start buying up assets if things get bad enough. So it will be interesting to see. And who's to say that other central banks won't follow? If the U.S. turns back, it gives room to the ECB. It gives room to the People's Bank of China. And Japan's like, all right, awesome, we're going exponential now. So, I mean, it's a real interesting experiment, guys. I mean, you take, for example, the big names that I know all the people who conspiratize over, the Rothschilds, but you also just take some of the big money managers in finance who are just saying this is one of the most interesting experiments in monetary policy history. It will be interesting to see what happens, guys. But who knows? We'll have to see what happens. Thank you all for sticking around the video. I think Bitcoin is going to be the solution to a lot of this. I'd love to know what you all think about all of what we talked about in the comments down below. If you think that we're going to see something as soon as 2019 or 2020 in the sense of a recession, or if we're going to blow to all-time highs towards NASDAQ 10,000 and other key levels, I'd love to know down in the comments down below. Get a discussion going. We're about to start the week here in the next few hours. I hope you guys are having a great day wherever you are, and I'll see you guys bright and early on Monday morning. But until then, have a great rest of your day. Take care.